the banking and financial services segments, and also from a number of segments which have been doing fairly well in terms of the overall management of their financial position, in terms of reducing their borrowing book, as also in enhancing the business position in the newer markets, and also in building capacity.
Right. Talking of earnings, Dr. Thomas, how are the valuations looking both on the benchmark indices front and also on the broader market front? Because there are two sections. One say valuations are starting to get frothy. Others say no, earnings support is there, so valuations are still fair.
Yeah, valuations do not look cheap, which doesn't mean that they are too expensive also, but we could term the valuations maybe reasonable in a sense. Which means that the current valuations and the pricing is, or the valuations is based on certain strong fundamentals like robust economic growth that has been happening in the economy. The rate of economic growth is very good compared to even other economies, and it's expected to keep up that momentum. The second thing is that the capex, especially the government capex, and the compounded annual growth of government capex in the last 7-8 years has been around 12%. A third factor which gives a lot of support to the markets is the probability of a soft money policy coming from the Reserve Bank of India in the coming days, which means that the interest rate cycle of rate hikes is past us, and we might see soft money policy coming in. Maybe it might take maybe 1 quarter, maybe 2 quarters, but it's going to come in. We are seeing a very strong investment cycle at this point of time. The PLI scheme, which the government has introduced, has also helped enhance capacity or introducing new capacity. And this enhancement and introduction of new capacity, all these things have gone into determining the demand for stocks in the markets, and also FI flows have been coming in. So overall, there is a robustness about the investment cycle, the overall economy, the liquidity conditions, and the interest rate scenario. All these things have helped the markets to move up at this point of time to the levels that we are seeing at this time. And coming to the relative valuations, the large caps look much better at this point of time. Large caps mainly because, for example, in the last 1 year, if you take the 12 months trailing feeds, the large caps are at around 24, whereas the long-term average is at 24. And the valuations are somewhere close to that, which means that the large cap segment is fairly priced and they make immense investment sense. When we go to mid caps and the small caps, and if you look at the 12 months trailing P, the small caps are at around 27.5, and the mid caps are at around 26. Which means that they are they have a bit of a stretched valuation. This is also mainly because of one factor that we have seen in the markets, that there is a lot of monies flowing into mid-cap stocks and small-cap stocks, mainly through the mutual fund. And these mutual fund monies which have been coming into the markets have led to demand for these stocks, and they have moved up. Which means that even in portfolios which are invested into large caps, mid caps, and small caps, there is a distortion that's happening at this point of time because of the rising value of small caps and mid caps. The large cap composition probably may be a little relatively smaller. Therefore, at this point of time, one could be looking at the large cap segment more rather than the mid caps and the small caps, and mid cap and small cap investments could continue. but it's the large cap segment which should be looked at more closely at this point of time.
So, just wanted to understand that the pharma space, you are bullish on that space. What kind of names as a house are you most bullish on, given that pharma is getting re-rated today, almost all around move coming in the second upgrade on Lupin in recent times? What are your best looking like in pharma?
Yeah, in pharma, even in MK and MK's portfolio and research, the names which have come up for a long time have been Divi's Labs and Laurus Labs and also Dr. Reddy's. So overall, because pharma, after a very good run during the COVID, and then it was a bit sold off, now it is on its way to come back, and we expect these stocks to do very well and the pharma segment to do much better.
Okay. The other space I want to talk to you about is the metals pack. One section of the market believes that dollar index coming down is actually hugely beneficial for metal pack. The other side actually believes that a weak US and China will continue to be an issue for the metal sector. Which side of the camp are you on?
Yeah, as far as metals are concerned, the metal prices, most of the metal prices are quoted in terms of US dollars. So the fundamental thing there is that if US dollar starts depreciating and if the US dollar weakens, all those commodities which are quoted in US dollars, which almost all commodities are including the precious metals, gold, silver, or even oil, those prices are likely to edge higher. But we need to get a clear signal on that the US dollar is likely to start declining. At this point of time, we see the dollar index has been at around 10150 to 10250 levels. It touched 104 briefly. But in the immediate term, it's expected to move towards the 99.91, 100.20 levels. But we will see a decline in the dollar index as the clear indications on US interest rate trajectory comes to the surface. That at this point of time, it's almost clear that US interest rates may not go. US official policy on interest rates would be one of hold at this time, and Fed could go in for a cut in interest rates also. Dollar has been able to hold well, mainly because of the rising interest rates in the US, and therefore the dollar index also rallied. Once dollar starts declining, the metal prices could gradually move up. That's a strong reason for metal prices to move up. But there are other countervailing factors also. Say, for example, China has been a major buyer of commodities, especially metals. And as of now, even based on Xi's address to the nation the other day, China probably is shifting a little bit because economically they have been quite depressed at this point of time with growth at sub 5% levels. It's highly likely that China could shift its focus to artificial intelligence and more tech-driven and more internal-driven growth. Therefore, that the Chinese demand coming into the markets or not, the US dollar declining or US dollar rising or not, these are two factors which would be critical. And I think it will be a prudent assumption to make that with decline in the US dollars, which could happen over the next 1 or 2 quarters systematically, the commodity prices could also move up.
Right. All right, Dr. Thomas, thank you very much for your time.